Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 1st of November in London. I'm Stephen Carroll. Coming up today, the UK's Chancellor speaks to Bloomberg in a bid to calm markets as the post-budget bond sell-off worsens. Apple disappoints investors with a tepid growth forecast and weaker revenues from China. Plus, fears of a return to escalation. Oil rises on a report that Iran is planning to attack Israel via its proxies. Let's start with a roundup of our top stories. The Chancellor Rachel Reeves is seeking to reassure financial markets after her budget triggered a sell-off in UK bonds. The negative market reaction has come as traders digested official projections that suggest an extra £142 billion of borrowing will be needed over the next 5 years to help fund a massive increase in public spending. Speaking exclusively to Bloomberg after the market sell-off, Reeves was asked if her government now risks its own Liz Truss moment.
We put in place yesterday in the budget robust fiscal rules that we will meet 2 years early. There's a significant fiscal consolidation during the course of this Parliament that takes debt as a share of our economy from 4.5%, which is what we inherited, to 2.1% of GDP. And we've set out a framework for the second phase of the spending review based on the envelope that we set out yesterday. That will require difficult decisions, but they're ones that this government are prepared to make, because we know the importance of economic and fiscal stability.
The yields on the UK's 10-year benchmark government bond have risen by roughly 25 basis points since Reeves's budget was announced, though the market movements this week didn't compare to the fallout from Truss's plan for unfunded tax cuts in 2022. It's still a hit to Labour's claim to have restored stability to Britain's finances. The search for bodies in stranded vehicles and buildings continues in eastern Spain after flash floods wiped through towns, killing more than 150 people. The Spanish army is being called in to help affected areas in Valencia tomorrow morning. Prime Minister Pedro Sánchez says the government's priority is to find missing people.
I want to tell you that the government of Spain is here to provide you with any additional resources you may need. I said it yesterday. We're not going to leave the Valencians alone. We're going to be with you for as long as it takes.
Spain's Prime Minister there speaking through a translator. He has also declared the area a disaster zone and warned there are likely to be many more victims. Apple says total sales in the December period will rise by a percentage in the low to middle single digits. That's below the 7% increase analysts had been projecting. The weaker than expected outlook comes as the company posted results that also included a decline in China revenue. The concerns weighed on shares in late trading, with shares down 2% post-market. That's despite total sales edging past Wall Street projections for the last quarter, rising by more than 6% to just under $95 billion. Here's CEO Tim Cook.
iPhone grew in every geographic segment, marking a new September quarter revenue record for the category. And services set an all-time revenue record, up 12% year over year. We also set September quarter segment revenue records in the Americas, Europe, and the rest of Asia Pacific, as well as in a large number of countries.
Apple CEO Tim Cook there. On a conference call with analysts, Chief Financial Officer Luca Maestri said services revenue would grow in the double digits in the December quarter, similar to the fiscal 2024 rate. Shares in Intel jumped by almost 7% in after-hours trading as the chip giant forecast fourth quarter revenues will be slightly higher than market expectations. The projections are sparking optimism that the company can win back some of its lost market share. Intel CEO Pat Gelsinger says the upbeat forecast is down to its cost-cutting plan.
We don't view any of these rumors as particularly meritorious. We laid out a strategy. We reaffirmed that with our board of directors. And obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey.
Gelsinger's Intel was once the industry leader in semiconductors, but it's lost out to rivals like Nvidia amid soaring demand for accelerator chips for AI. Orders for Intel's AI chip Gaudi have been weaker than projected. Oil prices have jumped following a report that Iran could be preparing an attack on Israel. Brent surged by as much as 2% after a report from Axios citing 2 Israeli sources. The move comes after a tumble in prices at the beginning of the week after a limited Israeli attack on Iran prompted the war premium to unwind. And Donald Trump has insisted he's leading the US presidential race. Addressing supporters, the Republicans' candidate cited polling and early voting data to make his point, adding that only foul play could prevent his victory. The former president has ramped up his speeches since polls opened, criticising remarks he says Joe Biden made about his supporters.
My response to Joe and Kamala is very simple. You can't lead America if you don't love Americans.
Donald Trump there speaking at a campaign event yesterday. The White House hopeful has also amplified comments about voting irregularities in Pennsylvania. Currently, most polls have the candidates essentially tied, with some models showing a slight Trump advantage. Those are your top stories on the markets. We are looking at the Nikkei 225 down by 2.4%. We had a sell-off on equities in the US yesterday, although futures today looking a little bit higher. The 10-year Treasury yield down a basis point this morning at 4.28%. In a moment, we'll hear more from our interview with Rachel Reeves and take you through details of those latest tech earnings. But another story that we've been reading this morning about a job that artificial intelligence might replace: fashion models. The Spanish fast fashion giant Mango is using AI-generated models now in some of its ad campaigns. The CEO, Tony Ruiz, has told us that it's about faster content creation. The brand has been using the images in 2 campaigns so far, and some of it includes disclaimers saying that AI was used to create the visuals. Now, Mango's planning to expand the use of this technology to its women's and men's collections, but hasn't made any final decisions just yet. Another big shift that's happening in the $2.5 trillion modelling industry. Brands like Levi's, Louis Vuitton and Nike are already using AI modelling companies. Mango keen to point out that it's still creating human jobs as well. It's opening new stores, for example, in the United States too. But interesting to see how much this trend will play out across the fashion industry and what it could mean for the future of the model. Well, let's bring you more next of our exclusive interview with the UK's Chancellor. Rachel Reeves says the number one commitment of her Labour government is economic and fiscal stability. After government borrowing costs have jumped following her budget on Wednesday, our UK correspondent Lizzie Burden asked the Chancellor if she was worried about another gilt market crisis like that seen under Liz Truss in 2022.
The number one commitment of this government is economic and fiscal stability, which is why we put in place yesterday in the budget robust fiscal rules that we will meet 2 years early. There's a significant fiscal consolidation during the course of this Parliament that takes debt as a share of our economy from 4.5%, which is what we inherited, to 2.1% of GDP. And we've set out a framework for the second phase of the spending review based on the envelope that we set out yesterday. That will require difficult decisions, but they're ones that this government are prepared to make because we know the importance of economic and fiscal stability.
But Chancellor, your margin for error for meeting your main fiscal rules near historic lows. If there's even a minor hit to growth, you'd have to hike taxes more to hit your fiscal rule. That's not very stable for the bond vigilantes, is it?
We have more headroom than the previous government left us, and that is important to guard against those sorts of shocks. But we in the budget yesterday were open and honest about the scale of the challenge left to us by the previous government, but we have now put our public finances on a stable and a solid trajectory, including through difficult decisions on increasing taxes. We did increase taxes yesterday by £40 billion. That was necessary, alongside with the changes we've made on spending and welfare, to put our public finances on a firm trajectory, and that's what we did in the budget yesterday.
But how can investors believe that this is a one-off hit when you repeatedly said before the election you weren't going to raise taxes beyond your manifesto commitments? Now you've raised them £20 billion more than the fiscal hole the Tories left behind.
Well, we were left with a terrible situation by the previous government, a big black hole in the public finances, a number of commitments around infected blood and the post office scandal that weren't properly funded. We've now put all of that out in the open, and we've raised taxes in a way that now put our public finances on a stable trajectory. Indeed, the Office of Budget Responsibility confirmed that we meet both our stability and our investment rule 2 years early. That should give confidence, alongside alongside what the International Monetary Fund said yesterday, that these were the right decisions for our public finances and indeed for growth. We're making the decisions to get our public finances on a firm trajectory and also to boost the growth potential of our economy.
But the IMF endorsement is almost out of date now, given the market reaction. And a lot of people are going to be asking what the point of all these tax rises was when the OBR sees the economy growing more slowly under this Parliament, under your plans, than if Rishi Sunak had stayed Prime Minister.
But the OBR say that their forecast in March would have been materially different if they knew then what they know now about the previous government spending plans. So those comparisons aren't fair ones to make. The OBR say that growth will be around the same in this Parliament as what they said previously, but of course those projections were based on spending projections which weren't real. The growth forecasts, though, aren't the summit of my ambition, which is why we are doing planning reform, pensions reform, skills reform to get our country growing again, and we're determined to do that. But the OBR also say that over the longer term our plans will boost GDP by 1.4%. That is significant. Well, 1.4% when our economy has barely grown the last 5 years. It is a significant boost to growth. But it shows that this government, it shows that this government, and this is 1.4% in addition to the growth we're already experiencing, just to be clear about that. And that would be a big uplift on the growth that we've experienced the last few years. But we're doing more to boost growth. We're getting Britain building again with those planning reforms. We're unlocking long-term patient capital to help small businesses and start-up and scale-up businesses to grow. All of that could have a big impact on growth, as could the £63.5 billion investment that this government unlocked at our International Investment Summit just 2 weeks ago.
And yet, Chancellor, for all your revenue raising, there is still going to be real terms cuts for some government departments. If that's not the definition of austerity, what is?
That's not correct. The numbers we put out yesterday that shows real terms increases to government spending of 1.5% during the course of this Parliament, 1.7% if you take into account capital spending as well. Austerity, 2%. Well, that would be even higher than the growth rates being forecast. Austerity is when you're cutting public spending. We're not cutting public spending, but it will require difficult decisions. And we set out the envelope for spending in the Parliament ahead at the budget yesterday. We are determined to live within our means. We are conducting a zero-based review to drive efficiency and productivity across government, because better public services are not just about money. It's about running those public services better, and that is what we're going to do.
Well, indeed, think tanks like the Resolution Foundation are saying inevitably employers are going to pass on this national insurance rise to workers, that this is going to be the worst term for living standards under any Labour government. Yes, you're not technically raising taxes on working people, but if you're honest, it's going to feel like it, won't it?
Well, the last Parliament saw living standards stagnate. It was the worst Parliament for living standards ever recorded. The Office of Budget Responsibility forecast yesterday that real household disposable income will increase on average by 0.5% in real terms per year. So that is a world away from the stagnating living standards that we saw in the last Parliament. But do we want to do more? Absolutely. That's why we're introducing planning reform, the pensions reform, the skills reform to get Britain building, to get our economy growing again, bringing in private sector investment, for example, through the National Wealth Fund and through the International Investment Summit that unlocked £63.5 billion of private investment in the UK, showing the confidence that business and investors have in this government and our strategy.
Chancellor, you keep emphasising the long term here. Do you worry that you're not going to get 2 terms in government to realise your ambitions, to get to the summit of your ambitions, because it's going to take a decade of national renewal for people to feel better off? I'm thinking about George Bush Sr. saying, "Read my lips, no new taxes," and he was out after 1 term.
Well, we made it was a significant budget yesterday, but that budget wipes the slate clean so that we never have to do a budget like this again. We are cleaning up the mess left by the previous government, but we are meeting our fiscal rules 2 years early. We've set the spending path for public services for the course of this Parliament. We will do a zero-based review to make sure we're getting value for money for that spending. We have had to make tax increases, but that is to get our public finances on a sustainable footing. Economic and fiscal stability are the number one priorities of this government, and we will meet them.
So can I take that confirmation, no tax rises for the rest of this Parliament?
Well, no Chancellor is going to be able to tie their hands in that way, but there was a significant budget yesterday because we had to wipe the slate clean after the economic mismanagement, the chaos and the instability from the previous government. No government should have found themselves in the position that we did, having to clear up that mess. We've now done that and we can move on.
So that was the Chancellor Rachel Reeves speaking exclusively to our UK correspondent Lizzie Burton. Well, let's turn next to the latest tech earnings. Apple reporting a tepid sales forecast as its China revenue disappointed. Amazon earnings topped estimates. And Intel surged post-market after its revenue outlook slightly beat. Our tech reporter, Newly Parnell, joins us now for more. Newly, great to have you with us on the programme. Let's start with Apple then. Shares moving lower post-market. What worried investors from what they heard from the company?
Right. Well, I think across the board, revenue beat expectations, but I think the worrying element here is the revenue forecast for the upcoming holiday period, which, of course, is a really important period for Apple when they sell a lot of devices. They said they expected revenue forecast to grow in the low to mid-single digits, and that compares with 7% that analysts projected. And then, the issues with Chinese revenue, that declined year on year, and China, of course, is a big market, not just for Apple to make their devices, but to sell them as well. It's their third biggest market for sales after the Americas and Europe, so that could be cause for concern as well.
A better reception on markets for Amazon's earnings. They beat estimates, but interesting to look at the commentary around their cloud business, considering what we've heard from some of the rivals in that space.
Right. In recent days, we've seen big growth in cloud sales for the likes of Google and Microsoft with their Azure cloud, which are, of course, rivals to Amazon and its AWS. And they said that sales growth grew 19%, which is, of course, a lower number than the 30+% that its rivals put up. But what's happening here is it seems to be maybe AWS is regaining some momentum that had lost. Of course, this is a huge element of any big tech company's, plans for sales these days, because people use the cloud for AI computations, which is a huge and promising new venue that they all want to push into. And of course, in the bigger picture, CEO Andy Jassy has been cutting to try to be able to double down, invest more in data centers to get some of that AI business. So I think, but the cloud number, it's cause for optimism, I think, for investors.
And then we were taking an interest too in Intel. A bit of optimism there from investors after what's been a rough time for Intel. I mean, their shares are down 57% year to date.
Right. What's happening with Intel, they're really trying to kind of move up the value chain in terms of chips. They're competing with NVIDIA, and they're very hot, AI computation chips, these AI accelerators. And Intel, I think the cause for optimism here is that they forecast revenue of $13.3 to $14.3 billion. And that was above estimates from analysts, so that's a positive for them. Chief Executive Pat Gelsinger is launched this turnaround plan. He wants to preserve cash. He's cut over 16,000 jobs as they try to shift it more into the AI chips game. So I think investors could be looking at this pretty positive revenue forecast and thinking to themselves, well, maybe he's on the right track.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.